TinOne is a private vehicle we've created in Canada just this year, so it's brand new. And we're looking to take advantage of what we think is a pretty interesting time in the tin market. So although we're private, I would counsel you to be aware of some of the nature of some of the statements I'm making here today, but then believe everything I say. So essentially what I'm going to do is I'll just talk to you a little bit about who we are, the people in TinOne. One or two slides very quickly on the tin space, if you like, the tin markets, etc. Although we've just heard a really good summary there, so I'm not going to dwell on that for this audience. But that essentially forms the basis for the reason, as to why we've created this vehicle and why we're doing what we're doing. Then I want to talk a little bit about what we see as the current opportunity in tin, and this is it's a reasonably technical perspective on why we think now is an interesting time to be involved in tin. And then I'll talk about what we're actually doing about that. We'll talk about why we're doing it, and then I'll talk about what we're doing in response to that, with including some discussion of the assets that we've already got within the vehicle. So in terms of the people, there's four of us that make up TinOne at the moment. So it's myself and Craig Parry. We're both geologists by background, earlier careers in Rio Tinto, etc. But Craig and I first met in the Oxiana days. So many of you here would be aware of the Oxiana companies and the company and the subsequent sort of companies that grew out of that under the leadership of Owen Hegarty. So we were part of that through the train wreck that was the Zinifex Oxiana merger and Oz Minerals and MMG, and then subsequently Craig and I both in Tiger's Realm and EMR Capital and other things associated with that same group of people, Owen and Tony Manini and Peter Albert and others that many of you will know. Subsequent to that, Craig went on to even bigger and better things in Vancouver and has been very successful in the Canadian market over the last few years, making a lot of money for a lot of people there. And I moved on to a technical role in tech resources in Santiago and Vancouver, where I was running all of the new project capture for that group globally. The third member of our team here is Mike Connert, also Vancouver-based, super enthusiastic young guy with good capital markets background, etc. in Vancouver. And then the fourth member of our team, who's here with us today, Jamie Alpin, sitting down there. Jamie brings a really great diversity of skills and background to the three of us. So Jamie was a long time in London and Guernsey, in the junior market there, working principally in projects in Africa. So brings, again, a great set of skills around governance, finance, capital markets, etc., from a different perspective from ourselves. So we subscribe to a pretty strong, we believe, a pretty strong no dickheads policy, following the great Sydney Swans. Sorry about that, I'm a New South Welshman. So we're all known each other for a long time, and we really believe that it's working together on something that's exciting is pretty good fun. So essentially the genesis of TinOne came from the slide you see on the bottom left there. And many of you who have been involved or thinking about the tin market have probably seen that slide before. So it's a slide that came out of a study that Rio Tinto commissioned from MIT several years ago, where they asked MIT to go and look at those metals that they felt would be most impacted by new technologies. And the winner, I think, to most people's great surprise, according to MIT, was tin. And so the genesis of TinOne was essentially that slide. And like most good things, it started with a conversation in the pub in Vancouver, Craig coming in to me and saying, "Do you know anything about tin?" And my response was, well, you and I should know something about it because we both grew up in the heart of the New South Wales, New England tin province, myself in Inverell and Craig in Glen Innes, so we grew up with cassiterite under our feet as kids, so we should know something about it. But neither of us had actually ever worked in tin. So we started thinking about it. I still had a full-time job at that stage, as did Craig. So over months, we started thinking a little bit more about this tin opportunity. And we started to think not only about that sort of potential demand side, and we've heard some of that there, but more along the long-term demand side. But one of the other things that really struck us when we started looking at it was the supply side risk as well, which we've also heard a bit about and we saw some slides just before, and there's 100 other slides that I could have put up here instead of the one on the top right. But we all, I think, are aware that the major resources, global tin resources and reserves, are in countries that I would say are on the end of most investors' comfort zone, let's say. So Myanmar, Bolivia, Indonesia, etc. So we felt there was both a supply side opportunity here and a demand side opportunity. So we started to think a little bit about putting this together. And at the same time, we started to notice that there were some people starting to think and talk about tin. So we started to see references to tin becoming important to be starting to develop. I think I'm going to change that slide because some of the more unkind members of our potential investor group have asked me if that's me in the slide there. It's not, so I'm either going to have to change the slide or have a shave. I'm not really sure which one I'm going to do right now. But so and at about the end of last year, I was leaving tech, and so that's when we put the group together to go and act on what we thought were these opportunities that were starting to present themselves. So I'm going to talk a little bit now about where we see that opportunity from a technical perspective particularly. So in our view, on the exploration and discovery side, exploration is essentially, and discovery are essentially, it's a business of probabilities. So the exploration probability of any given province, independent of commodity, is essentially a pretty simple function of the total endowment of that province versus the exploration maturity of that province. Pretty simple stuff. So a well-endowed province are the ones that keep giving, no matter as the maturity increases. So the great copper provinces, for example, the Neogene of northern Chile keeps on delivering. But eventually, as maturity increases, that discovery potential trends towards zero. So our thesis here is that tin has essentially been absent in modern exploration compared to most other commodities. So the amount of exploration activity and expenditure in the tin space in any given global tin province is far less than any of the copper or gold or base metal provinces. So our view, and that's illustrated here, for example, on the bottom right there, is a graph by Richard Schoddy. Many of you will probably know Richard's work. Very thorough. It's a graph of major mineral discoveries from 1900 until last year. I won't bore you with all of the details there, but there is not a single tin discovery in that graph. Someone as thorough and as detailed and as respected as Richard has totally ignored the tin world. He doesn't even see it. So tin's not on the radar screen, has not been on the radar screen. There's potash discoveries in there, there's mineral sands deposits, but there's no tin. He doesn't even talk about it. The top left, another way of showing it, is the latest figures from SNL around global exploration expenditures, and I could have shown this for as far back as the data goes. Again, tin is not in that graph. It's buried in the other category. So our view is, there are many ways to describe it, but our view is that the exploration maturity in global tin provinces is extremely low, and it provides, therefore, using that simple equation, if we pick the right provinces, if we pick those provinces that are endowed, then the exploration probabilities are extremely high. And I would say the exploration probabilities in tin are higher than essentially any copper or gold province I can name because of those simple factors. Another factor that we think is really important is that we've spent billions of dollars of exploration expenditure over years developing lots of great techniques, lots of knowledge around ore bodies, how ore bodies form, how we go and find them, all sorts of fancy machines that go ping. They've essentially never been applied in the tin provinces. We've developed all this technology, but we haven't applied it in the tin provinces. And these are proven approaches. We're not thinking here about anything that's new, or we're not trying to break any ground or anything. These are things that we know work, but we don't believe they've been applied to tin provinces. So our approach is to use those tools as well in those highly endowed provinces to increase our probability of success. And as I said, exploration, we view exploration essentially as a probabilities game, and you maximise your probabilities by mitigating risk and seizing opportunity. So when we think about our approach to tin, and when I compare it to my 30 years of mostly copper and gold exploration, it's all about understanding those risks and mitigating those risks and looking at how those risks layer. So here, I think we can think of exploration and discovery success in these fairly simple categories. There's the technical risk, and I think just talked about that, and in our view, the technical risk in exploration in tin provinces is very low compared to everything else. The probabilities of success are very high. The jurisdictional risk, we've looked at how the tin world is challenged in terms of where most of the resources currently exist. So we've taken an approach to minimise that jurisdictional risk. The big one, and the elephant in the room here for us, of course, is the market risk. We can see that as an opportunity in that the current market depression provides opportunity to capture projects and capture opportunities. The risk that exists with the market, though, is that the market won't re-rate on these new technologies and other things, and that will be in a long-term depressed market, and then that's going to be very unpleasant. But we believe by accumulating all of those risks, with the low risks and the upper ones, and acknowledging that market risk, that the cumulative risk for our activities in the tin space is actually lower than most cumulative risk in other commodities. So if you're investing in a junior copper play or a junior gold play, we believe the technical risk in any of those is higher than the technical risk in the tin world, and that the cumulative risks are also higher. So what we're doing about that is that we're capturing low-cost opportunities by staking in Tier 1 countries. So at the moment it is only Australia. We've looked at some things in Canada and Alaska, and we will continue to do that, but at the moment it's Australia. And to acquire known tin deposits in those Tier 1 countries. So we're doing whatever we can to eliminate that jurisdictional risk out of our opportunities. Utilise the research, public domain data, and all of that technology that's been developed over the years in other commodities into the tin space, which we don't think's been done before, and then we'll monetise the opportunity on the back of all that, with a re-rate in the tin market that we hope will come. So in terms of specifically what we've done about that, the first of those, the opportunities we've captured is the ones that Michael mentioned, the licences in Tasmania. So we've acquired the tin exploration and resource projects of TNT Mines Limited recently, so for a 4-year deal to acquire 100% of those projects. One of those being the Great Pyramid deposit here in the northeast of Tasmania, with an existing inferred JORC compliant resource. So that, we think, is one of those opportunities to acquire a deposit. We're not in exploration here, we have a deposit, and we're about acquiring that low-hanging fruit in that resource space there. And in terms of the Great Pyramid, there are 3 separate zones of mineralisation, and none of these are effectively closed off. So we think there's a really low-risk opportunity here to add significant tonnes to this deposit, and it's a great example, I think, of the concept of how little work's been done on some of these. I mean, the quality of the new technologies and the quality of even the basic geology here is very. And there's a lot we can achieve here by doing better or different work. And that, by way of example here, most of that resource is defined by drilling, the shallow drilling that was 40 to 60 metres, 1970s generation percussion drilling. A lot of that drilling finished in mineralisation, so the resource model is a sort of a skin of 40 metres or so from surface. And it's almost entirely open at depth. There's very little deeper drilling. We don't have really any great understanding on the controls. So there's this sort of concept that if this was a copper deposit, there would have been a lot of smart people for many years working on this and would have worked all of this out. There's a low-hanging fruit here. So we intend to go in here and do a limited amount of drilling, deeper drilling, following some basic field work to understand the controls, understand the structural controls on the deposit, to target the higher grades and to target that the extensions to the mineralisation. And we believe there's a significant opportunity here to fairly easily add some tonnes and concentrate on the grade as well. So we're doing our best to provide the highest grade in those new resources. The second licence that we've acquired as part of the TNT Mines deal is the Aberfoyle licence, a little further to the west, and contains the old Aberfoyle underground mine, which had a really nice, reasonably high-grade underground resource that was mined. There are numerous other parallel structures and other structures there on that same licence that are very lightly explored with known mineralisation that have just not been followed up, and it's a matter of the funds haven't been there to do that. So we again think there's a very low risk opportunity here to add additional material, additional tonnes to those licences by just doing some fairly basic work. What I'm really excited about on these licences though is the exploration upside here. So we've got some of these old mines, we've got compliant resources, but we've also got square kilometres of alteration and vein material on surface that there hasn't even been a soil sample collected on, not a rock sample. You can walk over these things and there is cassiterite hanging out of quartz veins on the ground, and no one has made a map, no one has taken a rock sample. So I'm super excited to get on the ground there and understand these areas. And it's pretty basic stuff, but by also doing some good work with modern techniques on understanding the alteration, etc. Because essentially these are hydrothermal deposits. I've spent 30 years trying to do this stuff in copper and gold mostly, but it's the same thing. Unfortunately, if Ian had have spoken to us, I'm sure he would have told us about the redox control on copper, gold versus tin. That's all it is. It's a reduced fluid, it's not an oxidised fluid. Same thing applies though. So super excited to get in and start applying some of those techniques onto the ground here. The other factor that we love about this is the outstanding operational environment that Tasmania provides, and particularly in the northeast of Tasmania where it's forestry land, very easy to operate, very, very straightforward access. The MRT down there is super supportive of new people coming in, so we believe it's the place where we can get on the ground and really start creating some interest, creating some results very easy and very quickly. The other thing we've done as well, when it was actually the first thing we did, was we staked essentially all of the open ground in the New England tin province where Craig and I grew up, and as the great man Hegarty himself would say, there's just oodles and oodles of potential here. It's open for anything we might want to do. And one of the great things about this, as in most states in Australia, there's an amazing amount of public domain data. The New South Wales Geological Survey has done some great work, and the backdrop here showing our 3 licences, the backdrop there is prospectivity studies that the New South Wales Geological Survey have done, and the red bits are the bits that they determine to have the highest probability. Super excited also to get on the ground there and start doing basic exploration, applying those modern techniques and those modern approaches to this large swag of ground here. And we're also doing further due diligence studies and business development, looking for other opportunities like this that we think we can add value to. So in wrapping up, as I said, our strategy is essentially to acquire a portfolio of high quality tin assets in this current market. The team has already got the background, some background in similar metals and have achieved, Craig and Mike particularly, achieved a great deal of success in the early days of the cobalt and the vanadium sort of uptick. So we're looking to repeat their success there. And then we'll take that forward into an IPO at the appropriate time. And we're currently in the process of raising that seed funding to get on the ground and get, or the first round of funding to get on the ground and get going on those assets. So Jamie and I are both here if anyone wants to talk to us later on. Thanks for your attention.